And thank you everybody for joining. We're gonna discuss today about obviously sales tax for international companies operating in the US. With me today is Brandon, our European tax manager. Is familiar with the European tax. Ari is from the territory of the US, can give us some slides and some input to compare the European business and compare to the US. And me, myself, my name is Tal Bar David. I'm the CEO of Complete. And let's jump into the water. Ari, I will let you to discuss shortly about Complete, and then let's take it from there.
Perfect. Well, thank you, Tal. It's great to be on this. So I think it's quite an interesting story, Complete. And I think obviously, Tal, you being the CEO, can obviously add in because, this is a lot of it is because of you that we have Complete. But Complete is part of the VAT IT group. We backed by VAT IT, which is, I would say, is probably one of the world's largest indirect tax recovery firms, being going for over 20 years with over 20,000 clients in all different markets, different countries. And VAT IT's focus is on indirect tax recovery and, assisting with, VAT recovery, VAT registrations, GST, you name it, import of records. That's what we do. And in terms of the US sales tax, I think it was always one of the missing pieces in the puzzle of what VAT IT could offer and it can offer. And I think, from our point of view, when we, came across, Tal and Tal, your history in US sales tax, from, your previous employment, I think it was a great marriage, with your expertise in the US sales tax and VAT IT's background and knowledge in, the other indirect tax space. Being able to put the two together and bringing Complete to life, so to speak, over the last 3 years has been an unbelievable opportunity for us, for VAT IT as a group and for Complete, and being able to really make an impact in this market. I think it's been great working with a lot of companies who are selling into the US and are trying to comply and just meet the US sales tax obligations. I think we've done a lot of great work in a short amount of time, and I think the future is very bright, and there's a lot of work still to do.
Yeah, so thank you, Ari. So I think just to say, I think, as you said, in my previous role, I was at EY leading the sales tax practice, where we've seen a lot of companies doing stuff manually. And it doesn't make sense to, when businesses expense their activity across the US, to still doing stuff manually. Obviously, it's costly, it takes a lot of time. And of course, human error are something that is almost impossible to eliminate. So with an automation, we are able to streamline the sales tax process. But before we jump into the automation thing, I think we should discuss the basics of sales tax and what we're going to cover today. So what we're going to cover today, I'll let Brandon to elaborate. I think this would be the main things that are important for us eventually, that people would go out with some insights and understanding of how a sales tax works, what you should be worried from, and how you should tackle these complex indirect taxes in the US. Brandon, what we're going to discuss today?
Yeah, so thanks, Tal. I think a big thing for us is that many companies across Europe are very unfamiliar with the US sales tax space and aren't really sure, where they have a nexus, how to track it, is their product taxable or not, and then if they do have a taxable product and they do have a nexus, maybe they have some exempt transactions, and so it's very, very complex. And I think we'll get into that in a little bit of time. And at the end, we will have a Q&A session where we'll run through your questions throughout this webinar. So feel free, to send through your questions. We'll try to get to all of them, throughout the course of the agenda.
Okay, great, thank you. So what is sales tax? So basically, Sales tax, as Ari said at the beginning, this is kind of the parallel concept of the VAT that we're familiar from Europe, where the main difference is that every state has a different legislation, different rules. And as you understand, this is the mechanism, this is the engine to finance the different states. So the concept of sales tax is, as you understand, it's a consumption tax, same as we see it in VAT. Businesses should charge sales tax every time they have a transaction with a US customer, either B2B or B2C. And there was a big change recently, which we'll get into it shortly. But eventually, today, almost in all the states, actually 46 states are subject to sales tax, beside the 5 states, which we call the NOMAD, which is New Hampshire, Oregon, Montana, Alaska, and Delaware. Actually, Alaska, it's in between, because Alaska as a state doesn't have a sales tax legislation. However, on the county and city level, they might have. So it's in between. So I think that the concept of sales tax is that it's important to understand that every time we have a transaction within a US customer, business or consumer individual, a sales tax is a question. So soon we're going to understand how we know to answer this question and what we should do. But before that, I will let Ari to say a few things as a territory manager in the US. They're very familiar about that. Ari, what experience do you see, obviously, with the US businesses?
Yes. So I think, as you said, Tal, I think in the US, sales tax is not a new phenomenon. You go shopping, there's sales tax on on a lot of the things that you purchase. So from a USA point of view, we found that they are very familiar with sales tax, paying for purchase, paying for purchases, paying for sales. But what we found, though, is from, and obviously Brandon will speak more on this, European businesses or non-US entities that are, selling into the US or doing business within the US, the system that the USA incorporates is very different. As you said, Tal, that, it's similar to VAT, but the way they do it is very different to the rest of the world. And I think that's where, where Complete has really been able to help our clients, is to help them streamline and automate that process for them.
Yeah, I think another point of view is where US businesses and even US personal, like individuals, are very used to see sales tax. It's not an anomaly. When I go to buy, I don't know, iPhone, so obviously it would the price tag would be, say, $1,000, and when I go to the cashier to pay, I would say it with another 8%. So I think this is the difference, where everybody is very familiar with the concept, while, as Brandon will elaborate in a second, while we see European business is still very new for them.
Yes.
Brandon, what you can tell us about the European market?
So Tal, the European market is very similar. They deal with VAT on a day-to-day basis. When they purchase any goods from the supermarket or whatever, they're very used to VAT. The problem comes is when they're doing cross-border transactions to the US, they don't know how to charge, when to charge, and if to charge. And so that whole complexity, brings a new element, to doing, sales in the US. And I think if we can maybe touch on the next slide, is for clients who do have US operations, you have to understand, two things, whether or not you have to collect sales tax or not. And it's broken down into two things. The first thing is, do you have some sort of connection to the USA? So the word nexus is almost like a connection. And the connection is two things. It's based off an economical threshold, or if you have a physical connection. So employees, a office, a warehouse, inventory stored in a certain state. And the economic side is, do you have certain value threshold in terms of, let's say, $100,000 per state or 200 transactions per state? And then once you figure out that you do have some sort of tie to a specific state or not, you have to figure out, is your product taxable in that state or not? Not all states, for example, let's say SaaS is taxable in, let's say, New York. But if you're doing business in California, it's tax exempt. And so understanding those rules is very complex. And so that whole process will determine whether or not you collect sales tax, you don't collect sales tax, and that becomes quite tricky. And I think, Tal, if you maybe want to go into, discussing Nexus and the product taxability, I think that could, give the listeners, a little bit more information.
Yeah, sure. Thank you.
Maybe just a point to add there, I often say is that in the US, it's that you're dealing with 50 different countries, you know what I mean? Because every state has its own laws, own legislation, what's taxable, tax rates, so from an outsider's perspective, someone who's doing business from Europe or from anywhere else, to really get an understanding of all the different states is very cumbersome.
Right.
It's very complicated.
All right. So let's try to simplify the things. So as Brendan said, we need to understand whether, as a business, when you do a transaction with a customer, with a business in Michigan, whether you have Nexus in Michigan, and then whether your product is taxable in Michigan, and if yes on both questions, then you need to collect the tax. So let's break it down and understand what is the concept of Nexus, because this is, I would say, this is the tie, the connection, the gateway to the sales tax world. So businesses can have a Nexus either because they have physical presence in a state, let's say offices, employees, sometimes subcontractors, even a trade show, or if you facilitate or do kind of solicitation of sales in a state, can create you a physical Nexus. But usually, because of where you have employees, and obviously after the COVID, the method of having remotely employees is very popular. So we can easily have office in New York, only in New York, where we used to have only physical Nexus in New York. But now when we hire remotely, another 20, 30, 50 employees across the US, we should be aware that every hiring create us a Nexus in this specific location. And this is where this was the status of the concept of Nexus for many, many years. And the thing was a big change at the end of 2018, where there was a case called Wayfair. I guess people already heard about that, where the Supreme Court determined that it doesn't make sense that relying only on physical Nexus, because we are in a digital era where we can easily do transaction cross-border from New York to California and from California to Texas. We don't really need anybody on the ground in order to facilitate a transaction. And what happened that many states actually missed a lot of money because there was no sales tax on the transaction if there is no one on the ground. And then Supreme Court decided that this Wayfair case versus South Dakota, that from now on, economic nexus is a new concept. And what is this concept of economic nexus? Each state actually determine a threshold that if you exceeded this threshold, dollar amount and transaction amount, so from that point on, you have now a nexus. Most of the states adopted the rule of $100,000 a year threshold or 200 transaction. There are some states where it's a bit different, like New York, where the dollar amount is $500,000 and 100 transaction. But I would say that 90 or 85% of the economic nexus threshold is $100,000, which once you exceeded this dollar amount transaction, from now on you have a nexus, and from now on you need to care about sales tax. And what does it mean that you have a nexus? So basically, when you have a nexus, you now have obligation to register your business for sales tax purposes in this specific state. So if I want to summarize the concept of nexus, which is actually the first question, if I'm a business doing a transaction in the US, in order to determine where I have nexus, I need to follow where I have offices or employees, and if there is any place that I exceeded already the economic nexus threshold. although it sounds very complicated, this is something that easily can be monitored automatically with different platforms, as we will discuss shortly. And then
One thing on that is for European businesses, let's say in Spain, in Belgium, around the EU, what happens if in their mind they're invoicing out of their home country, that they don't have a US entity that they're invoicing out of? How does that affect them and their taxes?
Yeah, that's an excellent question. So because of the concept of economic nexus until at the end of 2018, which I want to say something about this year. At the end of 2018, this concept of sales tax came to earth. But since it's a state legislation, only the states adopted it, accordingly. And only last year, all the states adopted the economic nexus threshold. That means that this is why it's very new for businesses outside of the US. So for businesses in Europe, when they do a transaction, even if they don't have any presence, any connection to the US, but they do a digital transaction, they do a tangible transaction, sending something to the US, they headquarter or the European entity, Spanish or whatever entity, are now, if they are exceeding the economic nexus threshold, are now obligated to register. So I understand the confusion, because many companies saying, listen, I don't have any relation to the US. I don't even file income tax returns. How come I need to do a sales tax registration? So this is exactly the point. Because of economic nexus, because of the digital things that we are selling to the US very easily, sales tax became a matter. So even if you have a European entity doing the transaction, facilitate the transaction with a US customer, you should care about sales tax, and obviously you can create yourself a nexus. I think that the next thing that we're gonna discuss, which is, I think it's much more simpler. As Brendan said, the first question was nexus, but the second one was whether my product is taxable or not. So as I said, since sales tax is governed by state level, so each state has a bit different incentive that they want to incentivize, or motivation. For example, as Brandon said at the beginning, for example, California, SaaS is exempt in California. On the other hand, when you do transaction of SaaS in New York, this is subject to tax. So every state has a bit different legislation. There is also slight difference whether it's a B2B or B2C, but generally speaking, every state is a bit different. Let's not doing it too complicated, but every state, because there are some cities and counties where it comes to be different. I don't think we should get into it today. There are some states like Colorado where it's hometown rules. Let's not get into it. But generally speaking, every state has a bit different legislation, and it's pretty a binary question. It's yes or no. Obviously, there are some places where it's complicated. What is my product? Am I a SaaS? Whether I am a platform as a service? Maybe I'm a data analysis services. So the classification for sales tax purposes is important, because if I classify my product as SaaS, which is exempt in California, however, by nature, my product is data analysis services, so that might affect the tax treatment. So although it's kind of a yes or no question, sometimes it's become more complicated, and it's important to pay attention that it might be different from state to state. And so I think this is the main thing that we need to understand, these two components, the nexus thing, whether it can be physical or economic, and what is the product taxability. I like Brandon to say a bit, because he's familiar with European business. What happens when companies are not following their sales tax obligations? What can happen?
So it's quite a tough one, because some companies go many years, operate in the US, they're not registered, they're not filing, and they sort of get away with it. And so companies feel like they can get away with it. The issue is that audits happen very frequently, And so when the tax authorities come and audit you and they say, hey, why haven't you been collecting sales tax in the state of Michigan for the last 5 years? You don't really have an answer for that. And so the repercussions vary from company to company and depending on the discrepancy and sort of your way to bypass taxes. And so they can be, fines, penalties, interest payments. They are quite severe. And so a lot of companies are now taking a lot more interest in the US sales tax, understanding the compliance element and understanding that to do business in the US effectively and compliantly, they have to sort of outsource this process to experts who know what they're doing, they know how to register them correctly, know where they have a nexus, and that they're filing the accurate sort of tax rates. And so I guess, we will go to a bit, further on, there are ways that you can mitigate this risk. Like, let's say you are a business that hasn't been collecting taxes for a number of years. There are ways that we can mitigate that risk for you, and there are solutions. So it's not saying that you must be, super nervous about. You have maybe not been compliant, but there are ways that we can, help you.
Yeah. So actually, the risk for not collecting sales tax when needed is actually you are exposed for audit from the tax authority, where they can audit you, and then if they find that you didn't collect for the past 2 or 3 years, so you're gonna pay it out of your pocket. Obviously, when you audit and they find that you are subject to pay these taxes, so we can see sometimes they also have penalties, interest payments, which is the most painful thing because it goes out of our pocket. Because the main thing with sales tax, which is a bit different from income tax, I tend to think, is that with income tax, you have the motivation to manipulate, to see how you reduce your tax liability. But with sales tax, is a bit different. The only thing that you want to do is to be in compliance and to make sure that you are collecting when you need, and you remit it to the tax authority. Eventually, if you're not doing it from day one properly, that puts you in exposure. But if you manage your sales tax obligation from day one, so you are basically kind of a pipeline between the customer and the state. So this is why it's very important for businesses to understand that sales tax sounds very complex, but if you streamline and you start to manage your obligation from day one, it shouldn't go out of your pocket. And this is very important. And as Brendan said, there are some transactions that we see that are exempt from sales tax, even in the US. And I let Ari to elaborate on that, because there are some transactions where the transaction is exempt by the nature of the product or by the nature of the customer. But I let Ari to discuss, as you can still see a lot of businesses in the US not collecting tax. So why that doesn't happen, Ari?
Again, I think, coming back to the point of things, every state being different, and this being quite a complicated process in terms of, do you have exempt transactions? What type of clients are you selling to? Is it a reseller? Is it an exempt organization? So it very much depends on who your clients are, what your product is it taxable in that state, and what type of service or what type of product you are selling within the US. So I think all of those combined makes things a little bit tricky or complicated. Even businesses who want to be compliant and are trying to be compliant, because of the very nature of not understanding, all the legalities of product and sales tax, we find that a lot of businesses just don't charge sales tax. So they may think that because they're selling B2C or they exempt or their clients exempt, that they automatically zero rating or not charging tax. So I think a lot of that has to do with getting a better understanding and a more knowledge base of the states you're selling into and the clients you're selling to.
Yeah, that's completely right. And I think if we want to summarize what we've discussed so far, we can even jump to the more advanced slide. If I am a business, wanted to understand whether I need to collect sales tax or not, actually I need to answer just a few questions. The first question obviously is, am I selling to the US? If no, obviously there is no sales tax obligation at all. But if I do sell to the US, so I need to ask myself, in the location that I'm selling to, whether I have an employees in that location. If I answered yes, so actually I have a nexus in this location. But if I answer no, I still might have a nexus because of the economic concept. So I need to ask myself whether I exceeded a dollar amount or transaction a quantity in this specific location. And if I said no employees, no exceeded the threshold, so again, no sales tax should apply because you don't have any nexus in this specific location. But if you have an employees or you exceeded the economic nexus in this specific location, that means that you have nexus. You have nexus, you have the obligation to register and start collecting tax only if your product is taxable. So this is the simple question most of the times. I won't say simple, but it's a basically yes or no question, whether my product is taxable or not. And if yes, so usually you should charge and collect sales tax from your customer. But as Ari said, we see that there are different businesses, different products that are exempt for many other reasons. For example, if I'm selling not to the end user or not to the end customer, I always like the example where if I'm Nike selling athlete shoes and I'm selling directly to Ari, which is located in Manhattan. So obviously this transaction is between a company to an end user. But when Nike or Adidas or whatever selling shoes to Walmart, obviously Walmart is not the end user. They are a reseller where they distribute the product, and then Ari will come to Walmart to buy the shoes. So the transaction between Nike to Walmart would be exempt because of this nature of the customer, which is a reseller. We won't get into what documentation we need to take, because this is another part that we don't want to get into too much. But there is a concept of exemption certificate that need to be collected, need to be documented in that space. But let's keep this discussion as a very simple. So as long as I'm not selling to a reseller or to someone who is exempt, like exempt organizations or governments, usually sales tax should apply. And the concept of having compliance with sales tax, after we understand the flow, it's pretty simple. Okay, you need to answer the questions and you need to follow the legislation. So actually, you have nexus, yes or no. The product is taxable, yes or no. And if yes, on both questions, you need to register starting from the day when you have the nexus. And then you need to start collecting the tax. So collecting the tax is not as easy as we think, because it's not a flat rate on a state level. Usually the sales tax rate is comprised by state rate, county, city, sometimes municipal. So for example, if we want to take in New York itself, we have more than 1,000 different tax rates. If I'm doing a transaction with a business in Manhattan, it will have a different tax rate if we're doing a transaction with someone in Brooklyn. So it's only based on the specific address, not even a zip code. So the specific address would determine the specific tax rate. So we understand now that we need to collect taxes. Okay, what happened next? So after we collected the taxes from our customer across the US, now we need to report, to file and remit the payments that we collected to the different tax authorities. So the concept of filing tax returns is also not difficult. Actually, once you register, the state tax authority determine your filing frequency. It can be a monthly basis, a quarterly basis, or even one in a year or semi-annual. But let's say now they classify you as a quarterly filer. So every quarter, you should report on all the transactions that you did, all the tax that you collected. Let's say I did in this quarter $1 million of transaction in New York. Now I need to file the sales tax return, which includes many information of non-taxable transaction, and taxable transaction, and obviously the tax that I collected that I need to remit. And then within the filing, you remit the payments directly to the tax authority, and then you get the confirmation that you are in compliance. and we discussed earlier in the conversation where Brandon said about the exposures that we see that businesses might have if they are not collecting tax. Brandon, what are the options or alternative they have to mitigate this type of exposure, of the past exposure, when they realize they had to collect but they didn't?
Yeah, so exactly. So as we were saying earlier, is there's no need to panic. There are solutions, there are ways around it that we can, assist you in, rectifying past tax liabilities. So the first one is, you can reach back out to clients. Obviously, reaching back out to clients and asking them now to pay the taxes is very, very difficult. And so what we're going to ask them is that can you please send us a form that basically says you are going to be collecting sales tax on behalf of us through use tax, and then you're going to be then sending that off through to the tax offices. The second one is you can backfile and pay the taxes yourself. It's very, very costly, and as Tal was saying, it's out of your own pocket. And so it's not the sort of route that we'd recommend, especially from a financial aspect. But if that is a route you would like to go, it's more than possible. The third option is the voluntary disclosure agreement. Is for us is probably the best one. Is to basically say, hey, I know I have been non-compliant. I have these taxes that I haven't paid yet. I should have paid these already. And you basically go to the state, and the state gives you sort of like a leeway to say, okay, we know that you have these sort of liabilities. We're going to give you relief, a financial relief from that, and you now need to pay XYZ rate with a little bit of interest. And for us, that's the best option. You mitigate the risk. Normally, companies who have been in the US for a very, very long time choose this sort of route because of sort of the high level of taxes that they do need to pay over. And so that's definitely an option. The last option is just to ignore it. Pretty much chuck it under the rug and hopefully it goes away. For us, it's not the best option, but I guess a lot of companies out there have different risk tolerances, and so you may feel like, cool, like let's just carry on business as normal and let's just see what happens. But there are some sort of situations where this is it's possible. Let's say that you have registered in a state before, you were doing transactions there, but now all of a sudden that client is no longer working with you, and you would almost have to submit a zero-rated filing. You don't have to do that. You can do that, to be fully compliant with the state, but it's not necessary always, and so you can sort of ignore it. The other option is as Ari was saying through the exemption side, is where you are selling to a lot of resellers and you have a lot of exemption certificates and you would be filing a nil return. There is the possibility to not file the nil return, but it is very, very risky, especially when the auditors come, because there may be one transaction that you didn't have the exemption certificate and you should have been charging sales tax. And so it opens yourself up to a lot of tax liabilities and a lot of tax discrepancies, and so we wouldn't recommend the sort of leave it alone. But I mean, it's sort of in your world and your risk tolerance.
Yeah. So actually, I think there is no right approach or right answer. It's very depend on the case by case situation, because if it's a big amount of exposure, before we're gonna pay it out of our pocket, and let's try to mitigate it by getting maybe a DPP from the customer. Maybe they paid already the use tax, or maybe, as Ari said before, maybe they have kind of an exemption that we can get. So if it's a big amount, we would recommend to try to mitigate it by reaching out to the clients again and to see if they have any exemption certificate that can reduce our liability. Obviously, if not, so we can either pay it out of our pocket, which is including the penalties and interest, which I would recommend this path when the exposure is low, obviously. And otherwise, if when the exposure is high and we weren't able to get any certificates from our customers, I would go to the VDA, where at least they can waive. The advantage of the VDA is that the tax authority waive the penalties. which can be significant amount if this is a big exposure. And ignore it, it's as Brandon said, I think that when you can ignore it only, I don't want to say only, but when the exposure is almost minimal or zero, for your transaction were exempt and the only exposure is not filing zero returns, so that might be also a possibility that we see in practice. I don't want to say that we are having that, we see it very common, but it's also something that we should be aware about that. So, so I think before we step into the next discussion about how we can streamline the sales tax obligation, because so far we just said how complex it is, and it is complex, and I understand it. Eventually finance people usually need to be focused on growing the business and not following compliance all day long. And happily, there are some softwares and platforms like us that automate this concept of sales tax, the obligation itself. And it's not that complicated. Once you implement a platform like Complete, so actually what Complete is doing is that we integrate to different financial systems like ERP system like NetSuite, like Microsoft Dynamics or whatever. And then obviously we within the integration, we got all the information. We are able to also to integrate to different CRM if the companies didn't adopt already any ERP system. We can also see companies that are using only payment platforms like Stripe, like PayPal. So we need to integrate to the place where you issue the invoices. And within the integration, we are able to do all this solution, the holistic solution for sales tax. The first thing that we do with automation is that we are able to monitor your nexus. So let's assume that now you did a transaction in Michigan. Okay, the transaction was $10,000 and another $10,000. Once you reach to the economic nexus threshold of $100,000, you will get a notification immediately. Hey, dear finance team, please pay attention that you now have economic nexus in Michigan and you need to register. So we always monitor whether you have physical nexus, whether you have economic nexus. We always monitor your registration obligation. And once we find there is a registration obligation, so we tell you that and we do the registration upon your approval. So this is the first thing. So we monitor all the time your obligations. And then the second thing is that every transaction being calculated with sales tax as applicable. So again, imagine that now you issue an invoice through your NetSuite or through your QuickBooks or whatever. You put the details and the items that you are selling. You put the address of your customer. And then once you hit on the save button, there is an analysis that being done in real time behind the scenes, whether you have nexus in this transaction. And if yes, whether your product is taxable in this specific location. And if yes, so we are pushing to the tax amount directly to the invoice, what is the tax rate and the tax amount that should be in this specific transaction. So every transaction being now tracked in our database, so the system knows exactly what is my filing frequency in every place, whether it's a monthly, whether it's a quarterly. So since we have already all the data, so the system can automatically prepare for you the sales tax return. You don't need to send us any Excel sheets or information of back and forth on emails. The system have it because of the integration. And the platforms, once the due date is coming, sending it for your approval. And once you approve it, we file it automatically to the different jurisdictions, and including remittance of the payments. And I think the advantage of having a platform is also that you are able to manage your sales tax obligations. You are on control on things. If you want to, let's say you have a due diligence and you need to provide different reports or all the returns that you filed in the past 2 or 3 years. So you have one place where you can manage everything. So I think that the place or the holistic solution of automation in sales tax specifically, I would say maybe differently with income tax because there are a lot of judgment behind it. With sales tax, you only want to collect when you need and then to remit it to the different tax authorities. So I think that the advantage of having an automation like Complete is that the integration today is very easy. And most of the platforms have an API connection, and if not, we do it with the different plugins. So the integration is very easily, doesn't require any development efforts from your end, and it gives you the ability to be in compliance. It saves you time, and I think that you can also get a lot of insights from each transaction that you are doing. I know that, by the way, we are still short in time, and I want to answer some questions. But before we get into questions, I think that the most important thing or to discuss about, I would refer you to Brandon also, because he's familiar with European business. What is or when is the right point to adopt technology or to adopt a platform? Because obviously everybody can do it manually, but there is some point that you see which is more common for companies to adopt a technology. What would you say, Brandon?
So I get asked this question a lot, on client calls where they say, I've been doing it manually. I use certain processes. When should I automate? And the right answer is from the beginning. Is, as Tal was saying, is it's so imperative to stay on top of the compliance elements of US sales tax and not to sort of fall behind. Because falling behind, does mean, certain penalties, certain discrepancies, and, no one wants to sort of have that looming over their US operations. And so I think, Tal, from my side, I think, is a potential question to ask is, let's say I've been operating in the US for a while. How do I know what my liability is, and how do I find that out? Let's say if I had to use Complete.
So usually what we do is when we get an insight that you are doing a transaction in the US, we probably assume that you might already have kind of a sales tax obligation. So the first step that we do with all of our clients is that a sales tax assessment can give you the insight, what is your status. So we look into your location of your employees or any physical thing for a physical nexus. And if you don't have, that's great. But then we need to take a look on the economic transaction that you did because of economic nexus. And by this assessment that we do, the analysis with the platform, we can provide companies the report telling them exactly where they have nexus, where the product is taxable, and based on that to see if there is any urgent next steps. Or maybe we can say, okay, let's wait. You don't have any exposure yet. You're fine. So let's say wait. But it's important to, as you said, that from the beginning, I would say from the first few $10,000s of transactions in the US, you should pay attention to sales tax. Obviously, to adopt technology is amazing if you're able to do it from the beginning. But we do have some clients that are like startups where they don't have, like, they issue invoices on PDF. So we're able to find a solution for them also, where we can integrate to different small or CRM platforms in order to provide them the solution. But I think, to answer your question, I think that having an assessment at the beginning of the process to assess whether you have an obligation or not, I think that's the right thing to do.
Agreed.
Yeah, and I think we are running out of time. We are exactly on 45 minutes as we promised. So I will answer just the two questions that we usually been asked. And the question is whether there is a difference between a B2B or a B2C transaction. So because in VAT in Europe, this is very common. If you do a transaction with an individual, it's completely different if you do a transaction with the businesses. So in the US, the sales tax usually doesn't matter. Every transaction, as long as the customer is a US-based customer, so the transaction should be subject to sales tax upon the different parameters that we discussed with the nexus or product taxability. But you should investigate whether there is a transaction. So you don't really care if it's an individual or not. The second question that we are being asked a lot is what happened in the e-commerce or the marketplace thing. So e-commerce businesses can sell through different channels. So if they are selling through direct to the customer, then maybe they have a Shopify store and they are selling directly to the customer. So this is transaction that's subject to tax. However, if they are selling through different marketplace, let's say through AWS or Amazon, or if they are selling through Etsy or whatever, so usually this marketplace are in charge on collecting the taxes on the seller's behalf. And there are specific rules. We won't get into it, but I just want to emphasize that there is specific rules for marketplace. So if I'm selling through Amazon, so usually Amazon are obligated to handle the sales tax on your behalf. Having said that, it does not prevent from the seller to report on his zero transaction that he did through the marketplace. They still have an obligation to file their tax return, but they don't need to collect and worry too much about their sales tax obligation. So I think this is the most common things. I think we covered pretty much in this 47 minutes. It was great to have you. You have here a QR code to speak with us. If you're wondering whether your sales tax obligation is something that you might already going to have, or if it's something that you want to manage, to think how you should do it properly, or if you're already in a very high volume of transaction in the US and want to automate it, feel free to book a meeting with our sales tax experts. We'll be more than happy to answer all of your questions, to see where you are, and to see how we can streamline and assist you with your sales tax obligation. I think that's it. Anything else from you, Brandon or Ari?
No, I think yeah, that was great. I think we covered a lot of topics. Yeah, thank you.
Yeah. Okay. Thank you very much, everybody, for joining us. It was a pleasure, and now I wish you all the best.
Cheers, guys. Bye.
Bye.